welcome. So excited that you're all here. Hi. My name is Malin Posern. I am a partner and managing director of Project Day here in the London office, and we invest in pre-seed, seed, and Series A in technology companies. And I have the great pleasure to be joined by Henrik here today, who is it's a very long list, but who is a fintech operator and also a former VC, and now a founder. We'll be talking to you today about technology trends, market shifts, and also some investment trends we're seeing. But first, Henrik, who are you, and how come that you ended up not pursuing a career in VC, but starting your own company?
Yeah, thanks, Malin, and thanks for having me, first of all. I'm Henrik. I'm Swedish. I've sort of grown up through the Stockholm tech ecosystem, you can say. I started at this payments company, Zettle, back in 2012. And had very early formative experiences, I think, there. I continued on with Spotify's growth team in Stockholm and New York, and again, sort of early got hooked on the ability to have an impact with technology. And I think those early formative experiences then sort of led me into the world of VC. So I spent 5 years in venture capital with a fund called Northzone, and sort of got the privilege to sort of learn a lot about sort of businesses, markets, and in particular, sort of spent more and more of my time on the SME fintech ecosystem. Now, I think after a few years, a sort of growing itch started to come through in sort of going back to those early experiences that I had at Zettle and Spotify. I think in particular, I really sort of enjoy the company building piece, both because I'm very competitive and I sort of enjoy that, but I also really love the company building and team building part of a startup, and that's something that I missed a little bit when I was a VC, even though I think it was really intellectually stimulating. And so once I then sort of bumped into this problem that we're now sort of serving with Mimo, and also sort of opportunistically having two old friends from Zettle that were sort of thinking in the same lane, it was too big of an opportunity to jump on, not to sort of go after it.
Yeah. So Mimo stands for money in, money out. And do you want to tell us a bit more about what you guys do? What is the problem you're solving, and why is this relevant for customers now?
Yeah, sure. So yeah, Mimo is short for money in, money out. We essentially help small businesses and their accountants and bookkeepers to essentially save time on financial admin, as well as better understand and control their cash flow, which is sort of one of the core challenges that many small businesses struggle with. And we sort of set out, and we've sort of seen this problem throughout all of our careers. So we're 3 co-founders. We've looked at this problem from a bunch of different angles. Already back at Zettle, we saw how merchants then, who were using Zettle to accept card payments, were struggling with more parts of their financial admin. And already back then, cash flow was a core challenge for many of them. And so I think we've seen this problem from lots of different angles. And in the end, for a small business, when you're sort of trying to get your customers on board, you're trying to scale your team, you're trying to find working capital, sort of managing financial admin is pretty far down on the list on what you want to spend time on. And cash flow is, however, unfortunately, very much sort of the oxygen that keeps these businesses alive. And so it's one of these problems to go after that's always high up on the agenda in terms of sort of pain point. But interestingly, it's also one of the ones that sort of many founders and sort of business owners want to spend as little time as possible on. And so that sort of creates a pretty interesting and dynamic environment for us to play in.
Yeah, I mean, SMEs have a special place in my heart, not only because we tend to invest in them and back them, but also as an operator, have been working in a few. I think obviously you didn't really have any specialists to look after every single thing in the CFO office, as we like to call it. So I think it's a great, obviously, proposition. But you are now in some pretty big news a few weeks ago. Do you want to talk to us about what that was and why that's relevant for your customers and for you as a founder?
Yeah, no, for sure. I mean, what we announced was obviously you, Malin, leading an investment into Mimo, which was exciting. It was a sort of 8 and a bit million euros funding round. And I think, for us, We're still a very young business. We're just over 2 years old. For us, it obviously allows us to continue to invest into more products and more working capital investment and sort of debt funding, essentially, that we can offer to our clients. And we already have a platform that helps you automate outgoing payments with invoice management and bookkeeping, as well as incoming payments with invoice management on the receivable side. But I think there's a lot more that we want to build out around that platform. And so it's sort of a dual investment now, both into the software, the product that we're offering, as well as obviously the distribution of that. So yeah, that was the exciting news. And obviously, we're also very happy to have you on board.
Thank you. Well, I think one of the interesting segues here we could take is a little bit to talk about technology and market shifts. Typically, we've seen tech shifts lead to behavioral change. We have seen mobile and cloud putting apps in our pockets, creating new software markets. We've seen the API ecosystem essentially allow for fintech infrastructure plays, etc. And now we have AI, obviously. When you think about the way you build your company, and also what you see amongst other founders and bigger businesses in the market, what do you foresee will be the way that AI impacts strategies and products built in fintech?
I think it's a very good question. And I think if you sort of take a little bit of a step back, I think we've obviously now sort of seen a few different waves in the fintech ecosystem where sort of when I was at Northzone and sort of even 10 years before that, we sort of this huge explosion of different point solutions being sold, sort of essentially coming to market with a lot of innovation and sort of solving different parts of the sort of financial ecosystem stack. I think with that came also for many users a sort of overload of different solutions that they sort of were expecting to sort of adapt in their day-to-day. And I think now we're at this phase where, to your point, the sort of infrastructure layer of fintech has sort of really matured, allowing us to go after sort of some of the higher tier problems, again, around how to put all of these pieces together in a better user experience. And I think what's interesting with AI is I would argue that sort of the financial tech ecosystem has probably been one of the sort of actually probably slower adopters of the sort of most recent boom in LLMs and all of that. Probably because of the sort of quality bar that many of the users have when it comes to taking care of their financials, when it comes to numbers. It's okay to hallucinate and have an LLM guess a little bit when you're designing something and it becomes red instead of green, but it's not when you're sending money to someone or when you're pushing stuff into your accounting platform. And so the bar is quite high on a quality level. And I think also users in the financial ecosystem have been using sort of AI-like and AI tools for quite a long time, right? We've had, for basic things like document scanning, OCR has done a pretty good job over the last 10 years. And there's been built, big businesses that have been built on that, which also raises the bar on what AI needs to be able to do. Still, we are sort of at this intersection now, or sort of at this crucible moment, I think, for fintech in particular, because I think we're starting to see how AI and LLMs is essentially making it easier and cheaper for anyone to build software. I think out of Stockholm, we have this really interesting company called Lovable that we're using internally. And it's sort of reducing the cost to produce software. With that, I think if you take a sort of 10-year horizon, the ability to also monetize software features is going to get harder and harder. But fintech, I think, has a really interesting sort of role to play in that given regulation and given the sort of need to maybe build a balance sheet to be able to serve financial services, there's going to be a lot of defensibility in the sort of fintech ecosystem. So I think I think fintech has a really interesting crucible moment now with AI because of that monetization potential that comes with it.
Very true. I mean, you mentioned regulation, which we'll come back to a little bit. But when you think about building product and technology, how do you decide what bets to take internally? Are you going fast, fail, velocity, or are you taking some bigger ones, and especially at this stage that Mimo is today?
Yeah, I think there's a sort of healthy balance between coming in with a point of view and sort of having a thesis for how we think that the market sort of should look and how what problems we could solve and how. I think it's sort of with our experience, I think we have come in with a relatively strong view. But I think you then need to balance that with being super data-driven and just speak to a bunch of your customers to really understand what the core problems are. And so we have this constant battle internally where we're trying to decide between the different opportunities that are there. Now, I think I would argue that there's very seldom a sort of true recipe or formula for how to figure that out. In the end, for us, a lot of the success comes from quickly being able to sort of put together products that are good enough for customers to try it out and then validate sort of the thesis that we have. But I think it's a constant battle and it's a constant sort of challenge for us in this sort of, for anyone that's building software products. But I think finding that balance between having a sort of thesis and your own view with being very data-driven and honest with yourself and actually listening to customers and actually speaking to customers on a daily basis, I think somewhere there's a sweet spot, and you just need to sort of wiggle your way between those two.
I like that. Actually, I don't know if I told you, but speaking of customer love, I think that's so important. You know, you're building for someone and they need to really enjoy it. When we actually did due diligence with your customers, I had a few ask me, can I invest in Mimo? That was quite cute.
I like that.
Yeah. Anyway, so coming back to regulation, because with fintech, obviously, there's technological complexity, etc., but the regulation and policy is always there. Can you maybe talk a little bit about how you ensure data security and also the kind of manage the rising risk of fraud, especially being kind of on a payments platform?
Yeah, for sure. I think what's interesting, we've probably seen a little bit of sort of retraction, I would argue, among sort of regulators over the last, after having seen this boom of innovation with sort of new players coming to market, exploring different types of regulated entities or structures, more or less sort of well-organized structures to sort of take a product to market. I think regulators, and in particular in the UK, have sort of retracted a little bit and are now a little bit more thorough on making sure that everyone actually plays by the book. I think sort of generally that's a really good thing for consumers. And so what we do is essentially simply make sure that we use very experienced, both internally obviously, but also external advisors on some of these things that are related to regulation. When it comes to sort of obviously with money movement, the biggest sort of risks that are present for us are around money laundering and sort of fraud. And so therefore, that's where currently we have this dual setup where we're collaborating with some of our infrastructure partners on building out sort of essentially the safety nets, both around onboarding and KYB, as well as the transaction monitoring and fraud sort of reduction. Yeah. But I think what's actually quite cool is that over the last few years, with the sort of maturing of the infrastructure layer, there's now also quite a few infrastructure players that can really help take on some of that complexity with sort of these specialist tools. And so when it comes to, for example, our credit issuing, we're doing the full underwriting, monitoring, and servicing, as well as including sort of transaction monitoring and fraud. Yeah. We're doing that all with actually 2 people internally, and it's something that in a previous company I was at, we'd been building for 3+ years with 30 engineers. And a lot of that comes from a lot better tooling that's now available. And so essentially by investing into that tooling and using both internal and external experts, we try to keep a very tight controls over that.
I mean, not really the topic of today, but it's quite interesting to think about the future, what AI native and AI first type of companies would look like, the amount of ARR you'll see per employee in those organizations. But I'm thinking about the regulation again, because obviously there's always you need to harmonize across a balance across the guardrails you put in place, and also make sure you don't stifle innovation. If you were to look at European fintechs today versus counterparts from other geographies, are there specific areas that you feel we could do better as Europe, or is there anything kind of stifling that innovation to you?
I think there's definitely been sort of improvements across the sort of EU, if you may, in terms of sort of trying to harmonize regulation. I think it's still, there are still for different financial products, it does vary a little bit market by market. I think there's sort of around EMIs and payment institutions, there's been a bit of harmonization over the last few years, but obviously still with sort of credit issuing and so on, it is still a little bit of a market by market sort of approach in how you need to go to the European markets. And so for us, obviously that impacts us. From our perspective, we think it's, we know how to do it, we've done it before, so we think it's, for us, it's probably a net positive in that we build some defensibility. However, obviously it slows us down in our ability to, for example, quickly serve our product in Germany. But overall, I would say that there's been harmonization over the last few years that has really helped. It is still sort of relatively complex.
Yeah, and it's also the cost of compliance and making sure that you stay on top of various different legislation.
Yeah.
I want to talk a bit about fundraising as well, because Henrik and I are here today, not because you were fundraising, but because I took a flight on a Sunday to make sure that we could work together. But there are a lot of fundraising rounds obviously happening, and this year already globally we've seen 350 fintech rounds. Can you talk a little bit about how you, kind of on the founding side, are seeing the fundraising environment, and are we looking at the next wave of fintechs being built?
Sure. So I think if you take our most recent funding round, where to your point you sort of leaned in and sort of showed some real interest, it actually meant that we accelerated the plans. We hadn't really planned to go out and fundraise when we started talking, and so I think there are always going to be sort of there's always going to be exceptions and sort of more extreme cases where I think in our case, we've been lucky enough to be able to, I think, relatively quickly sort of put together a product that customers show some real customer love for. And because of that, fundraising has been, it's never easy, but I think it's been sort of, we've really appreciated the ability to work more collaboratively with sort of people, investors like yourselves. I think when it comes to sort of, if you zoom out and look at fintech in general, I think there was definitely and has been a bit of a slowdown after the sort of 2021 hypes, right? And so I think especially fintech was a little bit sort of particularly hurt by that. Probably net sort of a good thing in that there was quite a lot of sort of tourist capital probably coming into to some parts of the ecosystem. If you look at what's going to happen now, I think obviously let's see what happens with inflation and all of that. But still, I think we're in a rising tide now again, I feel, when it comes to sort of fintech appetite in general, based probably a little bit on sort of what we are sensing in our day-to-day from sort of investor interest, but also just from speaking to other fintech founders. It feels like there was a little bit of a sort of overfunding that happened in 2021, and now we're sort of probably been through the worst of that. And I think maybe there's something to say on how AI can play a role there. Maybe it's a little bit too early, but for us, we've obviously, and I think we've enjoyed sort of being able to relatively quickly go out to markets and then sort of get back to work. I think that's in the end what we try to optimize for.
Yeah, need to execute. But obviously, let's see what happens with these fintech IPOs that are standing at the door. There are obviously a lot of people queuing for that. But I want to just come back to building a team. Team is key. That's what we invest in at the early stage at the end of the day. You're looking to expand now in the UK. What are you looking for when you're building your team here? Yeah,
good question. So I think there's probably two aspects that are relevant. I think first one is like the team structure that we try to build, and then the second one is like what individuals you put in that team structure. I think all the way since the start of Mimo, I think a few of us have had experiences in some of these very fast-growing teams that exploded out of the gates, maybe a little bit too early, and we also saw some of the complexities that came with that. So one of the decisions we made early was to go for relatively senior talent, but that still acts as sort of individual contributors, that still drive their own functions forward rather than creating layers of management. And so that's something that we've optimized for really early and try to build a relatively flat organization, but very high potential and high output individuals. I think that's the first piece, and that's something that we're trying to hold on to as just a general culture. I think secondly is obviously who you put in the seat, and I think obviously it depends a lot on sort of seniority and what part of the company, but I think if you really dumb it down, we're sort of looking for two things. We're looking for people who are in some way very competitive and or curious. And sort of with this changing nature of a sort of early stage startup, it really gets you far if you have that inner drive, if you want to sort of go the extra mile. And so we really look for that and sort of any experience that shows that. Secondly, we also think it's important not to take ourselves too seriously. And so we try to look for people that actually want to have a good time and are actually a little bit fun. Life is too short, we think, to build a sort of company and a culture that's not enjoyable. And so those two, essentially people that are very competitive and or curious, but that also don't take themselves too seriously is what we look for.
I was going to ask, what have you learned in your role as a VC that you're applying now to Mimo? But I think that's an excellent way to round off this chat. Please join me in thanking Henrik.
Thank you. Thank you.